All right, I'm going to take a look at the stock market today. It's always the same thing. Every time we get one of these intermediate degree corrections, the perma bears come out. It's always the beginning of a bear market. And as I've said many times in the past, not yet. Sure, at some point we're going to have a bear market, but the secular bull market is not over. Because we have had such a very strong move down into, this is almost certainly going to turn into be a yearly cycle low. I think we've now virtually guaranteed 20,000 is going to be a piece of cake on the NASDAQ. I will qualify that, however, and say I don't think it's going to be this year. I think we have reset sentiment with this big move down, which guarantees we're going to have multiple legs up still. We had a chance to get the final parabolic move into a final top, but I think the Fed short-circuited that just in the nick of time, I might add. I think this is the one time the Fed actually did what they needed to do and stopped that parabolic move that was potentially beginning a couple months ago with their talk of rate hikes and ending QE. So now I don't really think that we're going to get big new highs. I don't think we're going to resume this kind of a move again, but I do think we're probably going to be in a kind of a erratic, back and forth, choppy market this year, especially ahead of the elections. So it's probably going to be difficult trading. I would not be leveraged in stocks right now. But I'm doing a report in the for the premium subscribers today, and there'll be a more in-depth report tomorrow for the weekend report. But it's starting to look like to me that maybe we've got an early bottom here. I was kind of hoping that we'd get a bounce and then another leg down that would maybe bottom right ahead of that FOMC meeting, but I'm starting to see some signs that suggest that maybe the Fed or the plunge protection team have pulled out all the stops here and they've stopped this ahead of that FOMC meeting. They want to raise rates. So it's going to be difficult to do that if the market is still in a serious decline ahead of that FOMC meeting, which I think is on the 16th. So it's starting to look like to me, in our modern managed markets that the Fed has probably manufactured a bottom right here, and we're more than likely we're done with this yearly cycle low. But again, like I said, I think we could very well be caught in an erratic, back and forth, choppy market for most of the year, to where it's just going to be difficult. All right, so here's a longer term look. You can see this is the 200-week moving average. They're going to paint this weekly candle. This is typically how these interventions unfold. They'll paint the weekly candle, so it's got a big reversal, and then they'll make sure we get some follow through on Monday, and then that ends up being the bottom. So technically, it should be way too early for the daily cycle to bottom, but I think the plunge protection team has probably stopped any further decline. Now, the problem, of course, is that price is still just so far above this 200-week moving average. It would have been better if we could have got a little bounce like I was expecting, and then another leg down that might even come down to test this 3,800 zone here. That would be a 38% Fibonacci retracement of this entire move. That would be more natural, and then I think that could set the stage for another leg, significant leg higher. But because they've probably stopped this a bit prematurely, and we're still a long ways above this 200-week moving average, I kind of suspect we may be choppy here we could even be choppy for a year or more, and give this 200-week moving average time to catch up to price. So they probably stopped the bloodletting, but what they've probably resigned us into is a very choppy sideways market for many months and maybe even a year or more. That would allow the moving average time to catch up to price. So like I said, I'll have a lot more I've got some strategies that I posted for subscribers this morning, and I'm going to have a lot more in the weekend report that'll be out tomorrow.